What happens if digital currencies take over? Imagine a world with no cash. Not a single coin or bill in your pocket. Every transaction you make, from your morning coffee to your monthly rent, is digital, recorded, and traceable. This isn't some far-off sci-fi premise. It's a potential reality being built right now, and it could reshape our economy, our society, and our personal freedom forever. In fact, the transition is already happening. Get this. As of this year, 137 countries, which represent a staggering 98% of the world's GDP, are actively exploring or developing their own digital currencies. Just a few years ago, that number was only 35. This isn't just a trend, it's a full-blown global race to redefine the very nature of money. So what happens when it finally crosses the finish line? Section 1. The inevitable shift. For centuries, physical cash has been king, but its reign is nearing an end. The decline in cash use isn't just steady, it's picking up speed. In the United States, cash now accounts for only about 14% of all payments. In a hyper-digital economy like Sweden, cash is used in less than 10% of purchases, with digital transactions completely dominating. In China's major cities, mobile payment giants have already made physical cash a rarity. But this isn't just about convenience. The real driving force, central banks. They're watching the rise of private cryptocurrencies and have decided they want to offer their own official alternative, a central bank digital currency, or CBDC. So what exactly is a CBDC? Think of it as a digital version of a country's official currency. Instead of printing physical money, the central bank would issue electronic money, or tokens, backed by the full faith and credit of the government. This isn't the same as using your credit card or a payment app. Those are just tools for moving money around. A CBDC turns the money itself into computer code. And they're coming fast. The Bahamas, Jamaica, and Nigeria have already launched their own CBDCs, though adoption has been gradual. China's digital yuan pilot is the largest in the world, with cumulative transaction volumes hitting the equivalent of $986 billion by mid-2024. The European Central Bank is deep in its preparation phase for a digital euro, aiming to finalize the rulebook by October 2025. This is a global wave, and it's building momentum fast. Section 2. The two-sided coin, utopia versus dystopia. This new financial world is often sold to us as a kind of utopia, a world of ultimate convenience and efficiency. In this vision, managing your money is seamless. Every transaction is automatically logged, making budgeting a breeze. The risk of carrying a wallet full of cash that could be lost or stolen just disappears. For businesses, the costs and security headaches of handling physical money would vanish. Proponents also argue a fully digital system would be a massive blow to crime. Untraceable cash is the lifeblood of illegal activities, from tax evasion to drug trafficking. With digital currencies, every transaction could leave a permanent traceable record, making it much harder for criminals to hide. International payments, which are often slow and expensive, could become nearly instant and dramatically cheaper. This system could also supercharge financial inclusion. Billions of people globally still lack access to traditional banking. Digital currencies, accessible with just a basic mobile phone, could bring them into the formal economy, unlocking economic growth and reducing poverty. But for every sunny promise, there's a dark cloud of risk. A flip side to this utopian coin that starts to look a lot more like a dystopia. The first and most glaring concern is the total loss of privacy. In a world where every single payment is recorded, your financial life becomes an open book. Governments and central banks could have a detailed record of everything you buy, where you buy it, and when. While central banks in most democracies insist mass surveillance isn't the goal, and are promising to legislate privacy protections, the potential for misuse is massive. Critics in the UK have already dubbed the proposed digital pound a potential digital spy coin. Then there's the concept of programmable money. This isn't a core feature of every CBDC, but it's a powerful capability being actively explored. It means the currency itself could be coded with rules. Imagine getting a government stimulus payment that can only be spent on groceries, not fuel. Or imagine money that has an expiration date, forcing you to spend it before it vanishes. This technology grants an unprecedented level of control over individual spending. Experts warn it could create a system where your access to your own money is censored or controlled based on your actions, or even your opinions. And what about the people left behind? A fully cashless society risks creating a massive digital divide, shutting out the elderly, the unbanked, and anyone without reliable access to technology. In a world without cash, these groups could be cut off from the economy entirely. Finally, there's the danger of a single point of failure. Our current financial system is distributed. If one bank's IT goes down, others are still working. But if a whole nation's financial system runs on one central digital ledger, it becomes a giant target for cyber attacks or technical glitches that could paralyze the entire economy. Section 3. What this means for you. So, we're standing at a crossroads. One path seems to lead to a future of incredible convenience, while the other leads to a future of surveillance and control. This isn't some abstract debate for economists. It's a fundamental conversation about your relationship with your money and your freedom. Cash, for all its flaws, gives you a degree of anonymity and autonomy. It lets you make private transactions without asking for permission or leaving a data trail. Switching to a fully digital currency system changes that dynamic completely. It inserts a third party, the government or central bank, into every single transaction you make. This could fundamentally shift the power balance between you and the state. So what's the answer? Trying to stop technology is a losing game. The digital transformation of money is probably inevitable. The key is to be aware, to get informed, and to join the conversation. It's vital to understand the technologies being proposed, from CBDCs to programmable money. It's even more important to engage in the public debates happening right now about how these systems should be designed. Privacy, for instance, is a major concern being raised in public consultations for both the digital pound and the digital euro, and it's forcing officials to respond. Protecting our freedoms requires us to participate. This is one of the most important shifts of our lifetime, and we're here to help you make sense of it. If you want to stay ahead of the curve on the future of money, finance, and your personal freedom, make sure to subscribe and hit that notification bell. We'll be tracking these developments every step of the way. Conclusion: we are heading into a future where cash will likely become a relic. The world of central bank digital currencies promises more efficiency, speed, and connection than ever before. It offers the potential to clamp down on crime and bring billions of people into the financial system. But that efficiency could come at a steep price: our privacy and our autonomy. The same tools that could make our financial system more secure could also be used to monitor and control it in ways that were previously unimaginable. The technology itself is neutral. It's the choices we make about how to implement it that will define our future. So the question we all need to ask ourselves is this: is a future of total convenience worth the price, or is the loss of freedom too high a cost to pay? Let me know what you think in the comments below.